Also breaking right now, futures down this morning in what's expected to be another wild day of swings on Wall Street. President Trump's reciprocal tariffs are now in effect, hitting almost every nation on earth. And world markets remain gloomy, with European and Asian shares deepening their losses today. In Germany, the DAX down more than 3%. Japan's Nikkei index closing down nearly 4%, as markets in Taiwan, South Korea, New Zealand, and Australia all declined. President Trump signaling he's willing to negotiate on tariffs with trading partners on a case-by-case basis, but no progress with the defiant China, now subject to a tariff of 104% after Beijing refused to drop its 34% tax on U.S. goods. It likely means more expensive electronics and clothing and food. Industry experts warn that some prices may rise quickly for perishable staples like bananas.
Fresh products, because you can't build up inventories and there's a limited lifespan, you will feel that quickly, maybe as soon as a week or 10 days.
On Wall Street yesterday, stocks ended the day lower amid continued uncertainty surrounding the tariffs. The Dow sank 320, the S&P was off 79, NASDAQ plunging 335.
And more now on these tariffs and their effect on the stock market. Bankrate financial analyst Mark Hamrick joining us live with more on what we can expect. And Mark, what kind of swings can we expect to see on Wall Street today?
Yeah, good to be with you, Mary and Chris. I don't think there's any reason to believe that the volatility we've seen in recent days is by any means over. I wish I could give you better news on that, but let's think about the fact that, if anything, this trade war is only deepening. And so we saw what happened overnight with the U.S. tariffs going into effect, and we have yet to really see a substantial reaction on the part of our trading partners who've had these trade war bullets fired at them. And so this is what a trade war looks like. We've seen U.S. assets in decline, stock prices declining. We've seen the dollar losing value, and bonds have sold off rather sharply, meaning that bond yields are now higher than they were just a few days ago. So that's the situation. The stock futures have at times been mixed for the U.S. market, but as we speak, they're now lower.
And Mark, what advice can you give the average investor who's seeing their portfolio or retirement account taking a big hit here?
Yeah. Well, first of all, it really matters where a person is in their life with respect to their age and their investment time horizon, because most people are investing in the stock market for the purpose of their retirement. That is where most accounts are located. And we think about, for example, someone who's younger, someone who's decades away from essentially retiring and needing that money. They will move through bear and bull markets over time, and we may well be in a bear market here for some time. We just simply don't know. The same with economic expansions and recessions. For someone who is either very close to retirement or looking to engage in so-called capital preservation, fancy term for holding on to your money, they may need to dial down their exposure to the stock market. But let's think about the fact that when we hit that bear market status earlier this week with the S&P 500, that told us that, well, we've already experienced a significant decline. And so you don't want to sort of dump out of the market now and then think, oh, when do I have to get back in? That requires you to basically be perfect with your timing twice. For most people, the answer is just hold in there for a while, and we'll hope that this doesn't last for as long as we fear, but it could last for a good long time.
Bankrate financial analyst Mark Hamrick, thank you very much for taking some time for us this morning. We appreciate it.
Thank you.
6:38 right now, and more news in regard to the tariffs coming your way on CBS Mornings at 7 o'clock. Weijia Jiang will be live at the White House. Jill Schlesinger and Kelly O'Grady will walk us through what this means for consumers.